The Altria Group is a company engaged in the production and sale of cigarettes and some smokeless products in the USA. It owns subsidiaries such as Philip Morris USA Incorporated, which produces powerful brands like Parliament, Marlboro, and Virginia Slims. Now, let's move on to the financial indicators of the company. We can see that the company's revenues have remained roughly the same over time. Net profits steadily increased until 2016, but after the company began to change, as we'll discuss later, this situation became unstable. Unfortunately, the company's assets leave much to be desired, remaining at approximately the same levels as in 2010. However, the company's debts have significantly increased relative to its assets. Before I evaluate this business, don't forget to subscribe to my channel to not miss my next videos. My final assessment of this company is 1 out of 10. Although the company's revenues have grown in the past, 92.7% of those revenues come from its core energy brands. Therefore, the growth has become a factor of inflation as the company has produced almost nothing new over the years. In 2016, the company acquired 10% of Anheuser-Busch, one of the largest producers of alcoholic beverages, owning brands such as Modelo, Corona, Budweiser. But today it is clear that this investment was unsuccessful. Starting from 2018, the company began making investments to develop itself. For example, it entered a deal to acquire 35% of Juul, a manufacturer of electronic cigarettes. In 2020, Altria sold all of its Juul shares at a multi-billion-dollar loss, which shows that while the company may have billions, it's simply flushing them down the toilet. This all indicates that the company has reached a kind of ceiling and can no longer develop further. The company understands that in the future, without significant investments in advertising, fewer young people will smoke traditional tobacco, as there are already excellent alternatives, such as the legalization of cannabis in California and the production of electronic cigarettes. However, it turns out that this is not as profitable as tobacco. Moreover, this sector is heavily regulated, and the company has to pay millions, if not billions, every year to conduct such business. The company has reached a dead end and all it can do is buy back its shares and increase dividends, which is what the company is doing now. Approximately 87% of their profits are paid out in dividends. Due to the fact that they took on debt for investments in 2016 and 2018, the company now has fewer assets than debts, and in my opinion, these assets will only decrease in value because if their brands bring in less profit, it means that their assets should be cheaper. I said that the company now pays out about 87% of all its income in the form of dividends, but this is based on the results of 2023, when the company recorded about $8.5 billion in net profit. If you look at past years, this is one of the best years as the average profitability is $5 billion. However, these data are easily manipulated, so it is difficult to say whether the company actually earned these $8.5 billion or simply got rid of unprofitable assets at that time. All this explains why the company lost more than 30% of its share value since 2017. In short, the company has the following situation. Its net assets are at the level of 2010, and considering inflation, these assets are now cheaper. The company's debts exceed its assets, creating an additional risk factor for investors. The business has reached its development ceiling and can no longer grow. In my opinion, the business will only stagnate in the future because young people today are less tied to cigarettes due to the influence of healthy lifestyle trends on platforms like YouTube and Instagram. All this will lead to the fact that the company will sooner or later be forced to stop increasing dividends, and if the company continues to make such unsuccessful investments, it will be forced to cut its dividend completely, causing it to lose its status as dividend king. Currently, the company's shares can be bought at a price of about $46 per share, and its capitalization is about $80 billion with a P/E ratio of less than 10. I want to emphasize that all this data was calculated for 2023 when the company reached the peak of its performance. If the company cannot maintain these revenues, the company can easily return to a price of $30 per share. In any case, I will not buy shares of this company, since I see only one future for this company, which is the cessation of dividend increases or reduction of dividends due to the impact of inflation, reducing the company's net income and, as a result, a decrease in dividends and loss of status dividend king. The company has already completed 87% of its path to this decision, and I see no positive options for this business. The most positive option for investors would be to maintain such a high dividend, but if the company can't maintain those earnings, it will have to take on even more debt to avoid disappointing investors, which would result in a dividend cut anyway. In my opinion, you should not buy Altria stock, even if you are a dividend investor, because the company is already on the verge of collapse. Subscribe to my channel to not miss future videos.